Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Sara, Mehle, ESG Index Strategist with Nasdaq Global Indexes to discuss a family of indexes created for investors looking to track high dividend, rules-based fixed income solutions. Sara, it's great to see you as always. Welcome back to Trade Talks and give us more information on these particular indexes.
Hey, Jill, good to be here. So today we're talking about the Nasdaq Handle suite of indexes. We have 3 indexes within this suite. We have the 5 handle, the 7 handle, and the 10 handle. The overall objective of these indexes is to simply maximize returns while providing a steady stream of income in the form of monthly distributions. And we are using the same underlying basket of ETFs for each of the indexes. What makes them unique is that we overlay some leverage to each to reach a specific targeted distribution rate. So for the 5 handle, we're targeting a 5% distribution rate, 7 handle 7%, and 10 handle 10%. And to do that, with the 5 handle, we're not using any sort of leverage. 7 handle, we apply 1.3 times leverage, and then with the 10 handle, we're using 2. So we do have 2 ETFs tracking these indexes. We have the Strategy Shares Nasdaq 5 handle ETF, ticker FIVER, and then we have the Strategy Shares Nasdaq 7 handle index ETF, symbol HNDL.
And if we dig under the hood a little bit more, how are these constructed?
Right, so as I mentioned, each of these indexes has the exact same underlying basket of ETFs. So there are 19 of them. Half is a core portfolio where we're looking at, large cap, lower cost ETFs tracking the broader market and fixed income space, and 50% is an explore portfolio. Within that portfolio, we have exposure to 12 diverse subcategories of fixed income. So think of preferreds, muni bonds, REITs, MLPs, things like that. And so we're using ETFs again to represent each of those areas or subcategories within fixed income. The 50% core portfolio, that is using 70% of that is total bond exposure, 30% of that is large cap equities. And then within that 50% of the explore portfolio, we actually weight those 12 diverse ETFs based on relative strength. So there is a tactical component to this particular portfolio. And again, this is the same underlying basket for each of the indexes. What's different is the leverage used in each.
And finally, Sara, how have they performed?
First up, performance, if we're looking back to the beginning of the back test, March 12th of 2009, we have seen significant outperformance when compared to the aggregate bond index, which is up 46%. The 5 handle, again, no leverage, up 144%, almost 100%, outperformance over that time period. The 7 handle up 200%, and then the 10 handle up 394%. So we're not at, we're never going to outperform the S&P 500. This is not designed to do so. This is designed as a fixed income, monthly distributions product with that equity exposure. But again, this is a very unique set of indexes, and great for those investors looking to track, a different sort of fixed income solution.
All right, Sara, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.